Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and I have my colleague joining in from the studios, Yatin Mota. Yatin, another day of deluge when it comes to the Mumbai weather. Traffic jams everywhere, waterlogging across the city as well. Red alert, and schools and colleges were shut. How are you managing, Yatin?
So thankfully, when I reached office, the Mumbai floods or the rains couldn't hamper the travel. But I think while returning, there would be some, roadblocks. But yes, that's Mumbai for you. Every year this is a ritual actually. That it rains heavily,
Hmm.
the city gets stuck, but it doesn't stop working, right? So that's the spirit of Mumbai.
Yeah.
Probably now it's not raining much, at least in central Mumbai.
Hmm.
So gradually things are getting restored, but yes, it's quite heavy outside in terms of the water logging. Hopefully by a few hours, probably by 5 o'clock, things should get normal, assuming it doesn't rain. But yes, the forecast at least suggests that the entire Maharashtrian state would be drenched, and across the board there is red alert which is there, especially to do with schools and colleges. They remain shut for the day today.
That's true, Yatin. But as you said, Mumbai cars, the spirit, we take everything in our stride. So the show must go on, as they say. So which is why, of course, we are here with closing bell. But Yatin, follow on buying coming in on the last street today, fourth straight day of gains on the index. In fact, the Nifty clocked in the 25,000 mark on an intraday basis again today. I think ended just shy of that mark. Nevertheless, it was turning out to be a pretty lackluster session, but we did pick up pace and good to see that we are around that 25,000 mark, although we couldn't really close above that crucial level. Broad end of the markets were also pretty strong, outperforming today as well. The Nifty Midcap Index was 1% higher sectorally. Barring Pharma, all the sectors ended in the green. Bank Nifty, however, continues to underperform, although it did end in the green today as well. Aside of that, top sectoral movers, autos continue to do well. Now, there's a trigger for autos, of course. China has pledged to relook, rare earth magnet curves, right? So I think that's something that has got the auto index firing up once again. Yesterday, of course, we did see gains of 4% on the auto index, add another 1.5% today. Lots of stocks, especially the EV makers, were in traction, and they were in top gear, the likes of Tata Motors among top Nifty gainers. You also had some of the other, auto ancillary names, Sona, BLW, Motherson, all these stocks, Ola Electric for that matter, all these stocks, picking up speed in today's session. Aside of that, PSU banks also made a comeback today. That index was up somewhere around 1% or so. FMCG continues to do well. But the good part is that IT also participated today, up somewhere around 0.5% or thereabouts. In terms of individual movers, then, of course, we need to mention Reliance Industries, given the fact that it was among the top Nifty gainers, nearly 3% gain on that stock. Of course, a couple of brokerage notes, couple of triggers as well. But the top contributor to Nifty's gains today, Reliance Industries, that was among the top gainers. Aside of that, Adani Ports, Hero Motocorp, these were some of the other movers. On the flip side, Pharma, as I said, was sitting out today. So Dr. Reddy, Cipla, these were among the top laggards. Hindalco, Bajaj, Finserv are some of the other counters that didn't do all that well today. But Yatin, although it was turning out to be a fairly quiet session, we picked up pace, but quite a few mid caps were in traction today, especially the textile stocks
Yeah.
as well, right? And even the
Yeah.
EV makers, as I said. Take us through some of the movers.
Yeah. So if you look at the mid cap end of the market, almost half to 1% higher for those indices. Advanced decline ratio also looking quite healthy at almost 3:1. Among the gainers, we had Ola Electric after the new launches on 15th August. That stock has seen good traction. So today was up by 8%. Devyani moved 8%. Raymond and a couple of these textile stocks, including Vardhaman Textiles, Gokaldas Exports moved because the government has temporarily suspended the import duty on cotton. So probably raw material costs for these guys moves down, and hence the move. In the auto space, a lot of stocks continue to race forward. We have Hyundai Motors also making a move, almost 7% higher for that stock. What was not doing well is the likes of Chola, holdings 5% low for that stock. Newland Labs 4% down. BDL, Intellect, all of these stocks continue to crack in trade. What was doing well is Paytm in the F&O space, up 5%, L&T Finance up 3%, and we also had CCL Products, which is now hitting a fresh 52-week high, along with all of these counters.
All right, those were the movers and shakers. Some global updates as well. We had the Zelensky and Trump meeting overnight. And of course, post the meeting, Zelensky has agreed for a trilateral meeting. First, he'll be meeting with Putin, and then a trilateral meeting. And even sources were suggesting that Putin is also agreed for a meeting with Zelensky. So lots of headlines coming in from there as well. Now we'll watch out for that trilateral meeting that Trump seems to be arranging. Perhaps that could bring some closure to this Russia-Ukraine war that has been raging on for over 3 years now. But on that note, the stocks then on our radar this afternoon, starting with Reliance Industries. We are a network, we belong to the Network 18 group, which is a part of Reliance Industries. So that's a disclaimer there. But lots of triggers. First of all, I want to talk about Jio. It has scrapped its entry level 1 GB per day plan that was priced at somewhere around 249 rupees for 28 days, 209 rupees for 22 days, and 199 rupees for 18 days. So that 1 GB plan per day, 1 GB per day plan has been scrapped. Now, the most affordable option for prepaid users, would be 299, which will offer 1.5 GB per day. So that's something that, of course, will move a lot of these users to 1.5 GB. And, of course, we'll take you through what the brokerages are saying. But the change is now reflected on Jio's official website. It is now listing 1.5 GB per day plan as a base offering with no availability for 1 GB per day option. Now, this, of course, does push up the entry level tariffs by up to 20%. Also, of course, bringing it at the pricing structure at par with rivals like Bharti Airtel and Vodafone Idea, who are already charging 299 rupees for their entry level 28-day pack. But that, mind you, offers 1 GB per day data. Taking it to the price points for Jio, 299 plan will have 1.5 GB per data. For Bharti Airtel and Vodafone Idea, there is a plan 299 rupees, but that offers 1 GB per day data for 28 days. Now, let's take you through what the brokerages are saying. They are saying IFL Finance, in particular, is saying that the 249 plan from Jio was less popular, with less than 10% contribution coming to mobile revenues. So this 20% tariff hike will result in less than 2% revenue increase with full pass through for Jio. But Axis Capital is taking a more bullish view. It says that the 20% hike should lead to a 4 to 5% increase in FY26 revenue and R2, that's average revenue per user. And they are expecting both Vodafone Idea and Bharti Airtel to also follow suit and raise tariffs. Now, analysts are saying that 20% subscribers are for Bharti and Vodafone are on the 1 GB per day plan. Now, if they are forced to migrate to 1.5 GB per day plan, this will boost average revenue per user for both the players by 4 to 6%. So yes, that's how that hike will play out. It will be beneficial to these companies in terms of their average revenue per user and revenues as well. Now, overall telecom space, there's a report from Jefferies wherein they say that the average revenue growth for the first quarter was healthy at 16% on a year-on-year basis. But they are saying that if there is no tariff hike, that revenue growth may moderate from the second quarter onwards. Uh, in fact, they have been saying that Bharti Airtel is one of their top picks, and the brokerage believes that the 3% quarter-on-quarter revenue growth that the company saw puts it, on course for double-digit revenue growth going forward. And of course, they are saying that the potential slowdown in capex by Vodafone Idea due to unavailability or delays in debt raising could lead to further market share gains for both Reliance Jio as well as Bharti Airtel. Now they have listed out Bharti Airtel as well as Hexacom as their preferred bets from the telecom place. But yes, all in all, Reliance Jio has done away with the entry level 199, 209, and 249 plans. But of course, that would lead to an uptick in R2s going forward. So that's some positive trigger coming in for Reliance, and of course we saw the stock up by somewhere around 3% in today's session. Yatin.
Absolutely, Reliance in focus. After this ARPU uptake comes in. However, the company has clarified that this base pack will be available in offline mode, which is the Jio stores, or probably people who recharge mobile phones offline. The online plans will not be available. So yes, there is a chance that the value chain or the ARPU base moves from 249 a month or a 20-day cycle to a 300 kind of a cycle. Obviously, Jio would be offering 1.5 GB versus the competitors which are offering close to 1 GB data per day on this pack. But moving from Reliance, which is oil and gas major, to the entire oil marketing pack, which was active in trade, 2-3% gains for HPCL, BPCL, IOC. And if you look at Morgan Stanley, they have come out with the report. They're expecting a solid upside in all of these stocks. They continue to like HPCL, BPCL, IOC, which have posted profits and operating cash flows to the tune of $2 billion in the first quarter itself. So strong operating cash flows have been seen across the oil marketing companies. Russian crude oil continues to be the favored pack for the entire oil marketing pack, because the Russian crude continues to be available at a range or a discount of $2-3 per barrel. So when it comes to crude oil, the Russian discounts continue to benefit Indian oil marketing companies. In fact, BPCL expects that 35% of the crude sourcing will be still from Russia for the financial year, and HPCL has indicated that the crude oil sourcing from Russia stands at nearly 13%. Obviously, IOCL is still underperforming on the margin front, but HPCL and BPCL, probably because of the Russian crude factor, have been doing well. Obviously, if you look at the cooking gas fuel related losses, that continue, but yes, the government has also introduced compensation for oil marketing companies. So yes, brokerages do believe that if the pricing environment remains stable on the retail front and the sourcing from Russia remains undisturbed, then the operating cash flows and debt levels will continue to fall for the oil marketing companies, with superior free cash flows also being generated sooner in the coming financial years.
That's true. That's a positive report as well coming in on these OMCs. But I think the fact that OMCs remain outside the purview of GST, that's something that could be an overhang. Yesterday, source-based news that whatever GST rate rationalization is being mulled, no provision for getting petroleum products under GST, which is why yesterday some of these stocks were under pressure. But a recent listing, JSW Cement, that was in focus today. The stock was cementing good gains in trade, up 5% or thereabouts. Motilal Oswal has initiated coverage on this particular counter with a neutral rating. Now, the stock listed at a 4% premium. It was the issue price was at 147 or thereabouts. Now, the stock is around 157 or so, just about 10 rupees, higher than its issue price. But Motilal Oswal has a target price of 163 rupees on the counter, which implies a near 10% upside from yesterday's close price. Now, a few catalysts that Motilal Oswal has pointed out that could work in favor of JSW Cement. First of all, the company is expanding to North India, and that's something that will diversify its presence, according to Motilal Oswal. It says that the profitability prospect in the north is much better than south, which is why I think this move is finding favor with Motilal Oswal. This will, of course, help the company diversify its presence as well. As I mentioned, the company is planning a new Rajasthan plant. But of course, that will also come with a higher limestone cost. But the incentives offered by the state is expected to offset those expenses over the next 7 years. Capex of 5,600 crore rupees for the company for FY26 to FY28, which will drive growth but also push the net debt to over 5,750 crore rupees from the current 4,000 odd crore rupees in FY25. So by FY28, the debt is expected to go up to 5,750 crore rupees, which will of course keep leverage elevated at 3 times, net debt to EBITDA, I beg your pardon. Now, in terms of projections, Motilal Oswal expects revenue CAGR of 19% and EBITDA CAGR of somewhere around 31% over the period of FY25 to FY28. And they're also saying that forecasts are suggesting that the company could return to profitability in FY26 to somewhere around 300 crore rupees vis-a-vis adjusted loss of 55 crore rupees in FY25. Now, return on invested capital is also expected to strengthen to 8.17 by FY28 from 5.7% in FY25. Another big trigger could be the fact that ground granulated glass furnace slag. This is something. This is a profit engine for the company. Now, GGBS, as we call it, is manufactured from slag and is a byproduct of the steel making process. Now, GGBS accounted for just 33 to 34% of revenues in FY24, FY25, but the contribution went up quite significantly to somewhere around 61 to 76% of EBITDA by I think 26, FY25, I beg your pardon. Now, unlike most cement companies that depend on gray cement, JSW Cement, derives a significant share of profits from GGBS. So, that's something that could, of course, trigger uh, good growth going forward and profitability going forward for JSW Cement as well. Now, some upside, triggers could be from improved clinker to cement ratios and higher than expected capacity utilization in North. But there are some downside risks as well that could include pricing pressure in the South, reduced, trade volumes, and of course, delays in commissioning the new units as well. But Motilal Oswal feels that at the current juncture, the stock is fairly valued. It's at 16 times FY27 EV to EBITDA versus peers like Ramco and Dalmia Bharat. So all in all, these are some of the triggers that could bode well for JSW Cement going forward. It's of course dependency on GGBS, the fact that they are expanding in the north, and also the fact that they can of course return to profitability and the valuations that they command vis-a-vis the peers. So that's about JSW Cement. The stock saw good traction, but didn't have such a great listing, Yatin.
Absolutely, JSW Cement didn't have a great listing, but I think they have plans aggressively to increase their capacity fivefold over the next couple of years. So yes, the expansion plans looks promising, and the market capitalization is very close to that 20-25,000 crore bracket. Smaller than other conglomerates like Ultratech and the Adani Group's Ambuja, but yes, they are expecting that they would be catching up very soon with other cement majors.
That's true, Yatin. Those were about all the stocks that we had on our radar. But going forward, this week is going to be news heavy, right? First of all, we had the Zelensky-Trump meeting. Now we are waiting for the trilateral meeting. There'll be the Jackson Hole speech as well from the US Fed chairperson. So Street will be watching out for clues whether or not we can expect a September rate cut by the Fed or not. And of course, the all-important group of ministers meeting on GST, right? That's on 21st. So yes, lots of views to watch out for. Street is watching out for, waiting for clarity on the GST rate rationalization. When does it kick in, and which are the categories and where they fall, etc. So yes, lots to watch out for this week. But nothing to complain really. Fourth straight day of gains, and we are about around that 25,000 mark. We've cleared that 24,950 mark on a closing basis. So yes, the bulls are firmly in top gear, so to say. But Yatin, with that, I'll leave you. Of course, we'll see our viewers again tomorrow morning at 9 a.m. with opening bell. And of course, Yatin, I'll see you tomorrow again on closing bell. Hope you reach home safely. So you should leave soon and hopefully, have a safe journey home.